One of the most efficient tools to follow a trend are trend lines. Trend lines are lines that connect consecutive higher lows in an uptrend and consecutive lower highs in a downtrend. A trend line is most helpful when looking for entries in the direction of the trend on pullbacks and in the opposite direction after the trend line is broken. While they're relatively easy to apply on a chart, there are some trend lines misconceptions and mistakes made by traders in their analysis. That's why in today's video I will share 10 important trendline rules that all trend followers need to know about. First rule is to ignore the candle wicks. Trend lines are only useful if placed correctly. Otherwise, you could find yourself missing opportunities, or worse, trading on the wrong side of the market. With that said, drawing diagonal levels isn't an exact science. There are usually multiple ways to draw a trend line, but from my experience, the best trend line is applied by using the candle bodies and ignoring the tails. And let me explain why I prefer this method. The wicks on the candle show how far price went in one direction before market participants decided to reverse direction. In my opinion, closes are more important and they carry more meaning. If a candle closed at a certain level, that means that market participants were ready to accept this level as a market balance point. Highs and lows on a candle are the maximum and minimum they were willing to pay over a certain time period. Thus, closes are the places where the majority of traders agree on a certain price level, which makes the level more significant. I recommend using a line graph to plot major trends and support and resistance levels, as it focuses on the close price. Draw a few trend lines on a line chart, then change to a candlestick view and see how irrelevant the tails can be. Second rule, treat trend lines as areas. Price is a very dynamic concept, and volatility and momentum can affect price moves in a significant way. This is especially true when we look at trend lines. When traders are trying to place a trade at a very obvious price level, the professional traders know this, and they will do their best to kick out the amateurs by letting the price spike through the level or make it turn before the actual level. To overcome this shortcoming and to improve your trading skills, you need to start using areas instead of just single trend lines. By using areas, you can create noise zones and filter out a lot of market noise. If you use trend lines as zones, then you don't need to worry about drawing trend lines along the exact highs or lows. You draw trend lines of best fit. Third rule, the more connecting points, the better. As a general rule of thumb, the more times a trend line has been hit and respected with a bounce, the more important the level is. To truly validate a trend line, you need to see the price react from a line projected from a trend line drawn based off two prior points. Essentially, a third high or low point is needed to truly solidify a trend line. Once you have this, you can then feel better and look for opportunities to exploit the market when price reaches the trend line again. Number 4. Spacing between connecting points matters. The lows used to form an uptrend line and the highs used to form a downtrend line should not be too far apart or too close together. The most suitable distance apart will depend on the time frame, the degree of price movement, and personal preferences. If the lows or the highs are too close together, the validity of the reaction high or low may be in question. If the lows are too far apart, the relationship between the 2 points could be suspect. An ideal trend line is made up of relatively evenly spaced lows or highs. So why it's important to measure the time between consecutive touches? Well, before a breakout occurs, the price tends to cluster around the trend line, and the time between the consecutive touches tends to become shorter. As you can see on this example, we drew a trend line that connected several higher lows. As the uptrend started to lose momentum, the times between each consecutive touch on the trend line became shorter. Finally, the time between the last two touches was very short, after which the price broke below the trend line and started a strong downtrend. Buyers weren't strong enough to defend the trend line as sellers kept pushing the price lower. So if the market repeatedly tests a trend line many times in a relatively short period, and the price cannot drift far from that trend line, then a breakout will likely happen. Most of the time, the market will break through the trend line and attempt to reverse the trend. Of course, this is not always accurate, but when I see this pattern, I'm inclined to trade a breakout rather than a continuation play. Number 5. The angle of the trend line matters. As the steepness of the trend line increases, the validity of the support or resistance level decreases. A steep trend line results from a sharp advance or decline over a brief period of time. The angle of a trend line created from such sharp moves is unlikely to offer a meaningful support or resistance level. Even if the trend line is formed with many valid points, attempting to play a trend line breakout will often prove difficult. Number 6. The most profitable trades are in the direction of the trend line. Once a trend has been established by a series of trending highs and lows, the most profitable trades are in the direction of the trend line until the trend line is broken. Every time the market pulls back to the area around the trend line, even if it undershoots or overshoots the trend line, look for a reversal from the trend line and try to enter in the direction of the trend. One of the most important points that everyone needs to accept as a reality is that most breakouts fail. The market repeatedly races toward the trend line with very strong momentum, and it's easy to get caught up in the strength of the bar and overlook the big picture. For example, when the market is trending up, it has many strong sell-off that quickly drop to the bull trend line. This makes beginners assume that the market has reversed and they sell just above, at, or below the trend line. While beginners are shorting near the bull trend line, experienced traders are doing the opposite. They have limit orders to buy at and just below the trend line, or they will buy with market orders. The market usually has to go at least a little below the trend line during a sharp sell-off to find information. It needs to know if there will be more sellers or more buyers. Most of the time, there will be more buyers and the bull trend will continue. Number 7. Readjust your trend line after each break. After a trend line break, the chances are high that the area will get tested after a pullback. Depending on market conditions, the test can be followed by the trend continuing in the initial direction, in which case you must readjust the trend line with a new swing created. Prices don't usually move in an uniform fashion, and since trend lines account for both time and price, they move along with price and time axis. This means that any acceleration or deceleration of trend requires adjustments to the trend line. To decide whether a trend line should be adjusted or whether it has been definitely broken, consider how the price moves within a trend. During an uptrend, for example, the price makes higher highs and higher lows. As long as that keeps occurring, if the price moves below the trend line, it doesn't necessarily mean that the trend has ended. The trend line just needs to be adjusted. Number 8. Only draw trend lines when it makes sense. The reality is that not all trend lines have the potential to generate a trade. The best trend lines are the most obvious ones. Look for every swing point that you can find and see if there is an earlier one that can be connected with the trend line, and then extend the line to the right and see how price responds when it penetrates or touches the line. You don't want to have unnecessary lines on your chart when trading because you don't want distractions. Also, you need to focus on the bars and see how they behave once near the line and not focus on the line itself. As the trend progresses, counter-trend moves break the trend lines and usually the breakout fail, setting up with trend entries as we discussed before. Each breakout failure becomes the second point for the creation of a new trend line with a new slope. The point is that you should never try to force a trend line to fit. If a trend line doesn't fit well, it's probably best to move on to another pattern. Number 9. Higher timeframes trend lines are the most important lines. The longer a trend line is respected, the more important it becomes. A trend line that extends over 2 weeks will always be considered more important than a level that only extends on the course of a trading session. To get the very best results with trend lines, I prefer to use higher timeframes, like the 4-hour or the daily chart. Most large banks and institutions are only watching those larger timeframes, so it would make sense to look at trading these yourself to be in line with the traders who actually move the markets. Another reason why I prefer to use higher timeframes for drawing trend lines is because of the reliability it gives you. Compared to lower timeframes, the 4-hour chart will cut all of the noise that comes with trying to draw a viable trend line. Number 10. Use trendline channels to take profit when buying or selling near the trend line. A trend channel line is on the opposite side of the price action from the trend line and has the same general slope. In a bull trend, for example, a trend line is below the lows, while a trend channel line is above the highs, and both are rising up and to the right. A trend channel line is a useful tool for fading a trend that has gone too far, too fast, or to take your profit if you enter the long position around the trend line. If you learned something new and found value, leave us a like to show your support, subscribe to our channel, and click the bell icon to stay notified when we upload new videos. Until next time.